Are we done with testing where these yields can go to the downside, Gurpreet, or is there more of that to come, do you think?
Well, in our view, we think that the rates moves are probably at a low and they will trend higher from here. What's really driven the rate rally that we saw this week was a recalibration in growth expectations. And the way we view it is that the market has gone from expecting a sort of V plus shaped recovery to more of a V path. And so we have seen some cooling down in economic data, but that was in some regards widely expected because we were always going to have this big reopening burst of activity, and thereafter growth would be slow. And we have seen some peak momentum in US data. That said, data is still at very solid levels. The growth recovery is still on track. And so we think that concerns also potentially about the Delta variant at this juncture may be a bit overdone because in populations where large share of the adult population are vaccinated, you are seeing that vaccines remain effective against hospitalizations. But that's not a uniform narrative. Of course, in emerging markets, there are concerns, and so that may be driving some of this risk-off sentiment.
Good morning, Gurpreet. I understand that your base case is that tapering from the Fed will start in early 2022. If there's a surprise on that side, if we suddenly find that the Fed decides to start tapering the end of the third quarter, start of the fourth quarter, where do you think we'll see the biggest asset reaction?
Yeah, that's a really great question. We actually did some analysis where we looked at various market metrics and how they moved during the taper tantrum episode in 2013 and where they've moved now. And what we've seen is that many markets have begun to already price in expectations for the Fed to taper its asset purchases later this year. And some of the metrics that we looked at was volatility in 5-year US Treasury futures, for example, and the 5-year yield. And we think that there is less risk of a rapid repricing in financial markets in response to tapering. I mean, at last month's meeting, Fed Chair Jay Powell told us that the central bank is now talking about tapering, and they will be at upcoming meetings. So we think it's going to be very well telegraphed as an event. If anything, we think the risk for financial markets in the second half of this year is more around a potential data tantrum, and so data going in a direction that's not expected. As a reminder, much of the economic data, particularly in the labour market and inflation, is still clouded by pandemic and policy distortions.